Today, I want to talk about how Ken Griffin appears to be fleeing the country to somewhere very far away, with no extradition treaty with the United States. I also want to talk about how banks are going to lose significantly more money over the next few months, with many likely collapsing in March. So stay tuned and let's make some money. I hope everyone has a very Merry Christmas, celebrating with friends, family and lots of Christmas food. For a full view of today's Christmas hat, it's Santa climbing down the chimney. I also wanted to announce the Christmas sale for the Millionaire Mindset Trading Group. You can currently get 25% off your first month or 4 weeks for the price of free by using the code CHRISTMAS, all in capitals, at checkout. This is the best time to join the Millionaire Mindset Trading Group, as I won't be holding another sale for months now, and the prices will soon be increasing when we reach 300 members. So be sure to join the Millionaire Mindset Trading Group using the link in the description below, using the code CHRISTMAS, all in capitals, at checkout, valid for the next 7 days. But now I want to dive straight in with the key information. So, as Preview and Bull tweeted, you can see that Ken Griffin has just landed in Antarctica. You can see Ken Griffin's private jet departed South America, heading further south, and shortly afterwards arrived in Antarctica and landed on the Wolf's Fang runway. Ken Griffin is then disembarked and his plane is still stuck in Antarctica. Now that really is one way to flee the country to a separate country that doesn't have an extradition treaty with the United States. If you aren't already aware, there's some countries like Dubai, Switzerland and the Antarctic that don't have extradition treaties with the United States. What that basically means is that you can commit as many crimes in the US as you possibly like, but the authorities in countries like Dubai and the Antarctic won't arrest you and deport you back to America. And this really is pushing the boat out on one way to flee the United States to a country that really is deserted. We know Ken Griffin over the last 2 years has been taking out loan after loan after loan, currently with around $3 billion worth of external debt paying sky-high interest rates, and also multiple $1 billion of third-party investments. Ken Griffin's most recent desperation loan was only a few weeks ago when he took out an additional $400 million. Now, you may remember some time back that Ken Griffin spoke on a live interview saying that by damaging short sellers, you're just damaging the pension money of teachers and other employees. And he's now gone one further to say whenever you guys attack those short sellers, you're not only damaging the pension money of teachers, but also damaging the pension money of nurses. As Robert tweeted, he said this is how much of a nasty person Ken Griffin is. He brings nurses on their show. He said desperate Citadel that AMC apes won, but you threw their pension funds on the ground. As I said, you may remember Ken Griffin's speech on a live interview where he said that by burning Melvin Capital, you guys were just burning the money of pension funds of teachers and other employees. So it seems Ken Griffin is just trying to convince you guys and make you guys feel guilty for losing his pension fund money or the pension fund money he invests on others' behalves. But as Rattoy has tweeted, really these banks, hedge funds and market makers are illegally shorting on purpose and incurring fails to deliver on purpose as well, by saying banks have every type of technology to leverage and still fail to deliver. Remember, these banks like Goldman Sachs are not just multi-million, but multi-billion, if not multi-trillion-dollar companies. They are not failing to deliver on accident and forgetting to input correct data on accident. It's all done on purpose. They have multi-billion-dollar technology and multiple levels of review. These accidents don't just sneak through for years unnoticed, they're performed on purpose. You've seen time and time again these major banks find tiny amounts of money for mortgage documentation failures, short selling documentation failures, and total overall documentation failures. As I said, these failures like FTDs don't happen on accident, it's all performed on purpose. I also wanted to quickly show you some more testimonials from the Millionaire Mindset Trading Group. Raddy has increased his entire account by 43% in just 4 weeks. He thinks the group is worth every penny and he can't wait for larger plays and bigger gains. Rob has also said that on his first trade he made £245, saying one more trade like that and his entire lifetime membership is paid for. I've also got an entire page on the Millionaire Mindset Trading Group solely dedicated to testimonials. So guys, as I said, be sure to join the Millionaire Mindset Trading Group using the link in the description below, using the code Christmas, all in capitals, at checkout for an extra 25% off, or for 4 weeks for the price of 3. But as Practical Stocks has tweeted, Grok, which is Elon Musk's new AI system, suggests that AMC has a 42% chance of squeezing in 2024. Grok replied saying, "Greetings human, it seems you're curious about the probability of an AMC squeeze in 2024. And they said according to the guide, the probability of an AMC squeeze in 2024 is approximately 42%. However, this number is subject to change based on various factors. And that's likely why many of these analysts are predicting that AMC is likely to run to $400 or $600 per share over the next couple of years. They know that as AMC continues to improve its profitability, revenue and cash flow, the AMC stock price will increase. It's happened time and time again with companies like Tesla, companies like Booking.com and companies like Nvidia. Nvidia at one point was down 99%, but has obviously gone on to hit new all-time highs over and over and over again. As AMC improves its business and profitability, new all-time highs are guaranteed, just like all of these stocks have done many times before, especially when a number of major banks are likely to collapse in March of 2024 as a result of the Bank Term Funding Program expiring. So the Narrative Corrupdate tweeted saying banks are being propped up by the Federal Reserve via the Bank Term Funding Program, which is at all-time highs. You can see here the Bank Term Funding Program was introduced in March of 2023. It didn't just spike up in March and then trail off, never to be seen or heard from again. The Bank Term Funding Program has been increasing week after week after week, especially over the last 3 weeks in December and the back end of November, increasing from around $110 billion to over $130 billion. So that's $130 billion that banks do not have, that they are desperate for, and they've had to borrow from the Fed. This is obviously because of the massive withdrawal spiral that happened in March, and didn't just happen in March, but has continued happening through April, May, June, July, August, September, October, November, and December. And as David Summers has tweeted, he said the Bank Term Funding Program facility expires in theory on March 11th. Saying, what's the Fed's plan for the facility and the participating banks? There's been no public discussion of next steps, despite expiry being just 79 days away and funds drawn increasing. These banks come March 11th are all of a sudden going to have to repay $131 billion, which they do not have. And not just that, but these banks' losses are going to get significantly worse, and they're likely to draw out significantly more money through this Bank Term Funding Program loan. As Wall Street Silver tweeted, this article says that US banks could get slammed with another $160 billion in losses as commercial real estate faces its biggest crash since 2008. We know these banks are sitting on hundreds of billions, if not trillions of dollars in unrealized losses already, many of which are already becoming realized. And this is an extra $160 billion to shortly add to the pile coming early 2024. Ultimately, this is a big problem for the banks, and these banks will be struggling and will be desperate for money come March. I expect a number of banks to end up collapsing without these loans, especially if the Fed does indeed demand repayment, as they should do so. And obviously with banks collapsing, with hedge funds losing hundreds of billions shorting the market, that's exactly where that 42% chance of a squeeze happening in 2024 comes from. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.